again very soon. The market is not having a great Friday at all. If you're a bull specifically, the Bank Nifty is now down about 1.5% and the Nifty is below the 17,000, almost at that 17,400 mark. Dan Fineman, the co-head of Equity Strategy Asia Pacific at Credit Suisse, joins us now to talk about how the setup is at the moment and what the expectations is as we move along through the course of this year. Dan, thanks a lot for being with us on the channel. How are you looking at the situation now? Are you cautious? And what is the outlook on a market like India?
Globally, we're cautious, and actually, we've been concerned about the rally we had earlier in the year. We viewed it as a bear market rally. For us, rates are still an important issue, and we think the worst lies ahead of us for developed market economies. We don't think that we will have a soft landing. We are still expecting a recession.
Dan, so if globally you are cautious and you're expecting a recession, do you think a market like India can emerge unscathed? I ask because, there are a lot of things that are improving in our own markets, whether it is growth picking up, consumption has picked up as well, at least compared to what we saw last year. Do you think emerging markets like India could outperform developed markets if we do head into this recession, as you call it?
Emerging markets will do better than the U.S. The valuations are looking better. We don't have the inflation problem that you had in the U.S. Some emerging market central banks are ahead of the curve, at least as compared with the Fed. Earnings in some markets, I think, will do much better than in the U.S. So, yes, indeed, emerging markets should be a place investors should be looking at now.
Dan, just want to get your thoughts on, this latest rumble that we're getting from the U.S. Overnight, all this news on SVB Financial. I think it's making a lot of people very nervous about whether this is a one-off because these guys were lending to startups or whether this is just a sign of perhaps things to come. I mean, a sign of how higher rates are biting.
Yeah, well, I think that there's no escape from the impact of higher rates in the markets where you've had big increases. I think in Asia, we don't need to worry about this as much. The rate increases haven't been as steep. The banks have not overly exposed themselves. You had a lot of leveraging up in the U.S. in the years following the global financial crisis. By contrast, Asia has generally deleveraged.
Mm-hmm. Dan, just to play devil's advocate, got your point on emerging markets probably being in a better space than some of these developed markets. But if you're going to get, a return, 6% return, putting your money in U.S. treasuries, could that money become hesitant in moving to emerging markets where perhaps there are higher risks and you need to account for the global exposure as well?
I think some emerging markets will be vulnerable. The emerging markets that have large and persistent current account deficits will find it problematic sourcing capital globally with U.S. rates going higher. But much of Asia is it has stronger external accounts and would be able to handle the higher U.S. rate environment.
Hi, Dan. Good morning. Dan, I'm going through your note, and a lot of your positivity on the emerging markets is based on the weaker dollar. So what kind of a level are you working at, on the U.S. dollar? We track the dollar index. That was threatening to breach that 101 odd mark. It's popped its head back over the 105. So what's the level you're looking at there?
Well, short term, I think that the dollar could be a bit firmer. This is because of the Fed becoming more activist again. But longer term, and I'm talking about, say, 3 years and beyond, longer term, the dollar looks problematic. You've got a much bigger current account deficit in the U.S. than any other developed market or major economic region. You've got a big negative net foreign investment position in the U.S. On most any metric you look at, the dollar is heavily overvalued. So our belief that the dollar is going to be weak is a multi-year view. Short term, we're probably going to be seeing a bit of a bear market rally for the dollar.
All right. So, Dan, if you're working with a weaker dollar in the coming years, would you be positive on the commodity space as well?
Yes, indeed. It should be positive for commodities. Particularly, I would be particularly focusing on forward-facing commodities that would be benefiting from, say, the carbon transition. The legacy commodities may be less exciting.
You want to name a few?
Well, on the less exciting end, it would be the traditional fossil fuels. On the more exciting end, it would be minerals like nickel, where you have a high usage in renewables and EVs.
Okay. In fact, in EVs, that seems to be the more exciting end across the board, right? Not just in commodities, but also in equities. I was noticing in your note that you've identified, at least for the Chinese markets, some industries ranging from EVs and renewables to automation. Is that a space that you would extend to other markets like India as well? Because there's lots happening here on the electric mobility side.
With EVs, a lot depends on policy support from the local national government. China stands out for how strong the policy support for EVs has been and probably will remain. India, less policy support, less excitement, I think.
Okay.
Dan, so just, a larger point on India in context to what's happening in China. Just this morning, we've got news that Mr. Jinping has obviously been, nominated for a third term. What does that mean over the medium term, short to medium term, in terms of flows, policy? Because this year has started off with money shifting more to China and away from India. How do you see that equation play out for the rest of the year?
Well, I do think that China does have an impact on funds flows elsewhere in Asia, and we have seen funds flows into India bounce back in March. I think that a part of the story there is, in fact, that, say, China has become a bit less popular. But this isn't really, I think, the main issue facing India or other markets. I think if you have good fundamentals, investors, the money will come to the market regardless of what's happening in China.
I just have one final question because, the next event to watch out for is the FOMC meeting on the 22nd of March. What are you forecasting? The going rate at the moment is perhaps a 50 basis points rate hike as well from the Fed. Is that what you're looking at? And if it comes through, what do you see would be the impact on equities globally?
Well, I think in general, the main point is that markets have been consistently surprised by how aggressive the Fed has had to be. I don't think those negative surprises are over. I think markets will still have to mark up their expectations, particularly for how long rates stay high. Maybe the terminal rates are now being priced in accurately, but I don't think that the length of time that rates will have to stay high is yet fully priced in.
Okay. All right, Dan, we leave it at that. Thanks a lot for joining in and giving us your thoughts on the markets as well as what your expectation is from the next big event, which is the FOMC meeting on the 22nd. By the way, the market is under a lot of pressure, so don't lose sight of what's happening. The Nifty has now given up on 17,400 with so much ease and has moved to the low point of trade. This is not just any fall. It is a cascading fall that we've seen after the initial gap down opening. The market has fallen more. And now the Sensex is advancing towards almost an 800 point, in fact, 800 plus point cut. So it's not looking like a good start at all. Given up on all major averages, the 20, 100, 200 DMA on the Nifty and scaled back quite a bit.
The problem, Sonia, is on the banking names.
Yes.
You have 900-point cut out there. It's broken the 20 DMA with ease. We're trading close to around 500 points below that 20 DMA odd mark. So the banking names are taking a big knock. And that's the problem. The question is, are we going to go ahead and revisit those lows of around 39,800 odd? That's going to be a crucial mark. So let's see whether or not we can see some bit of a bounce from here. But otherwise, the first 30 minutes of trade, they're as bad as anyone would ever imagine waking up today. So let's hope there's a bit of a bounce in store from here. For the time being, we'll slip into a short break. On the other side, we'll get chatting with Mr. Vinod Agarwal of Eicher Motors. He'll talk us about the sales for the past month. Later on, we'll connect with Mr. Rajiv Kumar Vishnoi of NHPC to discuss the hydropower sector and the business outlook. You stay with us.